I'm Dan Fitzpatrick at stockmarketmentor.com on Tuesday, August 13th, and I want to look at electronics for imaging. I featured this yesterday, EFII, as a volatility squeeze that looked like it was poised to break out. You know, that's exactly what happened today. And I think you want to just stay long the stock if you happen to take advantage of that. Now, look, I mentioned yesterday that this was a fairly illiquid stock, so you needed to be careful about that. By the way, I didn't move the stock. I don't have that much reach. I don't think so. Anyway, but I want to show you this though. Let's say you looked at that video and said, okay, yeah, I want to buy this stock. This is what it looked like yesterday. For 2 days in a row, it had poked out above the upper Bollinger Band and these volatility bands. That's what they measure. Very, very tight, ready to go. Your high here was $30.88, and so you're not sure, you know, the market was actually a little bit weak at the open. Not that this should trade along with the market necessarily, but you're not sure whether you want to get long. And so what you do is, in order to make that decision, take that action, you get down into a really tight time frame. Frankly, you can even start with a 1 minute if you want. You can see how illiquid the stock is. But first thing in the morning, the stock was on the move. Let's zoom out to like a 5-minute chart, and you really get a sense here that the stock gapped up at the open. And so you look at this and you say, okay, well, I can't get this. You know, I see the stock up here at 31.14 or so, wherever it was after the first 5 minutes. Doesn't look to me like the stock's going to pull back. And by the way, isn't that what you would expect, that it not pull back, because it is just in the initial stages of volatility expansion? So if the stock, you think about it, if the stock were to pull back and give you an opportunity to buy at yesterday's close, would that not be actually a failed breakout? See, so you, by definition, you're going to be chasing this stock. You're going to chase the stock. A lot of times, the way to trade a gap is to back away, let the stock come back and fill the gap. This wasn't enough of a gap for that, but a lot of times the way to trade the stock is let the stock go, gap up, and then when it rolls over and starts trading lower, that's when you take your that's when you make your move, you take your stock. But here, you know, you're looking at the daily chart. You're not expecting a pullback. You are expecting the stock to do essentially just what it's done, is gap and run. And so you look at this. This is what happened after the first 5 minutes. You go ahead and buy some stock. You should be in this stock by 31.14, 31.15, easy. And then as soon as you're in, you get out of this time frame and you don't look back. You just let this stock run its course. It's up nicely today. My bet is it'll continue to move, not forever, but should probably continue to move with this kind of velocity for another day or two. And you just have to know what your time frame is. Are you just trading these very short swings here where, you know, if the stock gets up to 32.50 or 33 bucks, you're going to go ahead and sell? Or did you take the stock because you like this uptrend and you want to stay involved? I can't tell you the answer to that question. All I can do is tell you that that absolutely is the question that you need to be asking yourself. So anyway, this thing worked. And members, I want you to get over to the strategy session. Got a lot of things that are working, and I'll chat about Apple and how we're going to make that trade.